Hello and welcome to Weekly Open. My name is Brian. We've got Cred and Don both on the line today. Let's just say hello. Hello. Cred, how you doing?
I'm doing very well. Been short-term trading a bit, following headlines like the monkey that I am, and yeah, overall doing pretty. It's tidy. How are you?
I'm doing well. I've had my sickness, my flu has like just been morphing into new things. So I'm still not feeling 100%, but I think I'm getting there. So I'll take it.
Good.
Don?
Oh yeah, you can actually still hear it in your voice.
Yeah, I've got congestion. It's turned into just like some nasty congestion and stuff, but it's all right.
I hate that. But no, I'm doing good. Just chilling, taking it easy. Yeah, cannot complain.
Good. I don't even know what to say about the charts. Like
Horrendous.
Yeah, it's pretty ugly. And I got to do the thing where I move it. This is like bear market. You gotta constantly have to move our heads off of the bottom right of the chart.
We have avatar support. Yeah.
Don, you want to kind of walk us through what we got?
Yeah, sure. On the monthly time frame, right? It's still the same picture that we've had for ages now, with 14K support and 20K resistance now. Since this breakdown, I think anything like any momentum of 20K is a pretty good buy. Any move to 14K is a good buy. Anything in between is a little bit of a risky setup, high time frame wise anyway. There's not really that much more. Like it's kind of crazy how accurate the monthly chart's been. You've had a massive range here that broke to the downside, and ever since then we've just been non-stop bearish, right? And the moment we get like a big range on the monthly that breaks up to the upside, doesn't have to be too big, but can just be like consolidation like this. I think we're gonna see the tides turn, but that could take a while. And then when you go to the weekly, you have another like a little bit of a different picture, with 16K support just being tested. The last 2 weeks, we're still hanging around that part. Like it's not really been moving at all, which does remind me of 20K, right? 20K, we hit it. We just hung there for like a couple of weeks, and then just went up a little, broke back down again. I could see us like go sideways here for a while and actually like go up a little for at least a little bit. But yeah, it's not really too conclusive in my eyes. But I don't hate this right now. It's just the lower time frames and the higher time frames suck, right? The weekly, on like, if you just ignore everything else, you just look on the weekly, I think there's like a buy set up here. It's the problem is that the monthly looks like shit and is very far from either a momentum trade or a support buying trade. And the daily, if you look at the daily, are in this as well, where just every single kind of momentum to the upside. You get one candle to the upside and you get 4 bleed candles, and then the chart just dies. And this you can see on, like, if you go to the 5-minute, you can see this horrendous price action here, right, where it doesn't actually move at all for like hours on end, like zero movement. We've had that a couple times during the weekend. In general, this just screams shitty market. So yeah, that's kind of why we're all looking at it in disgust, I think, because yeah, it's just not pretty. But there's one setup that could be interesting here. Is the 15.8K support down here. It's the first test we had. We can undercut it. I think you could make an argument for something like this. Also works on the lower time frames. On the 4-hour, you have a same kind of setup ish, where you have this, right? So it's the same on both time frames. You could argue that could go up, could go down, whatever. The problem is we're in a bear market and prices have been going down, and there's actually not been any bullish activity at all since the top, basically.
We talk about there's two days there that were green.
Yeah, you have to really squint hard to find any green candles. So it's a rough one, but I think if we go to 14K, that's going to be an excellent buy, just based on the monthly. The monthly's been king, so kind of follow that. If we go back about 20K, I think that's a really good buy as well, because then you momentum drive to. I could see it go to 35, honestly. Anything in between is quite tough and takes a little bit more nimbleness. I mean, I've been trading around this thing a little bit. I made some money on the altcoin front, but it's not an easy market right now, is all I can say. And Bitcoin has been even harder than the altcoins, which is interesting.
Yeah, well, it just chops people up. If you go back to that low time frame, there was a chart pattern in there.
Oh, which one? The 4-hour?
Yeah, that right there. So it's like on the left hand side of that, it broke out of that, continuation pennant type of thing. If you do chart pattern stuff, yeah.
What, this?
So broke. Yep. So broke down from that and wick to wick, even whichever way. It's like very clean, and then it's like doesn't hardly make new lows, and then just kind of sweeps back up into the same no man's land. And I feel like any people trying to trade that, unless they just take their profits really quick, if they're looking for the measured move or that kind of stuff, you're just getting wrecked over and over again. And it's that type of market. Like, got to just take your W's if you get them and move on to the next trade if you're trying to trade the low or mid time frames.
Oh, this is pattern heaven, huh? A lot of patterns, but all of them are fake outs.
Yeah, none of them really carry through.
Yeah.
We haven't had any reversions. That's the thing, right? If you think about all the big levels we've broken down from, specifically recently, like 30K breakdown, no real reversion or retest, 20K breakdown, no real reversion or retest, or even any type of squeeze. It's been very, very one-sided. So if you consider the logic of reclaim setups in general, they assume that price and delta to some extent diverge. And so the breakdown doesn't stick. It gets absorbed by, passive orders or limit orders and then goes back up. But like at its core, that's a bull market setup, right? Because it sort of implies that sellers are doing business at bad prices or being aggressive where they shouldn't be, and the market doesn't accept the lower prices. So like when people talk about reclaims, like ordinarily that's a bull market type of setup, or kind of maybe like bottom of the bear market type of setup. So I think people using that as their like de facto assumption about whether a breakout is going to breakdown is going to hold or not, it hasn't been terribly accurate, frankly, in these conditions. I pretty much agree with Don. Like, if I can actually screen share really quickly. Let me make sure I get the right screen.
After y'all are done screen sharing logical stuff, I'll show you my stupid stuff.
Yeah, we've got to balance each other out, right? As far as this goes, like, I agree. If you're looking for, like, at least for me, if I'm looking for weekly swing strategies, I need structure that's visible on those higher time frames. For me, that's, as Don said, either above, back above 1920, which would invalidate the larger 20K breakdown, or it's at the sort of 12 to 14 support buy, as he aptly described it. Neither is available right now. We broke down from the 20K thing, but we haven't reached, if you will, the next level or the logical target for it. So just purely based on that high time frame swing strategy, that there isn't anything for me to punt. In terms of where this whole over-under head and shoulders thing might form, it's actually based on the daily time frame, which is the lowest close of the nuke. This is the CPI day LOI, I think also, but specifically the CPI day bounce, and that kind of carved out the range we're in. And even within the range, if you look at the price action that's been made available to us, this is still support for the time being, because you had low, as you said, undercut, and then that support again. But in terms of where the market went after it initially failed to break down through the lows, the best it could do was just to reach the midpoint of the range, which is here, and then immediately sell off. And generally, you don't want to see that. Like, even in a sort of neutral market environment, you don't want to see the range midpoint acting like as an obvious pivot, or at least you can sort of infer signals from it that if the market is strong, the midpoint isn't going to act as resistance. If the market's weak, it's going to act as support. It will find resistance there. So you can get some sense of directional bias as to what happens at the mean. In this case, even though this is like quite a good setup, like Don said, there's some weekly structure here. It's a failed breakdown. Like, why aren't we getting at least to the other side of the range, right? Because that's like the baseline assumption. When the market fails to break one side of the range, you ordinarily target the other side. Just like if this would exceed the range high, you would ordinarily target the range low. In this case, that hasn't been made available because it got stuck at literally the first place where it could get stuck, which is the midpoint, which isn't great. So I think, as I said, the swing strategy, there's nothing there. on a lower time frame, intra-week type of thing, I think it's reasonable to at least be open-minded to doing business at support. Be that if you could humbly target the back to the range midpoint, or even the daily and weekly open. Maybe it does set up a swing to the range high, but this is kind of still where we're trapped. And the available evidence of this bounce only taking the market to the midpoint isn't great. So for me, I'm still very much on low time frame mode.
What even is that range high? Like 17 something?
Yeah, it's 17.6 range high. Basically 16K range low, and the midpoint comes out at
saddest thing I've ever heard.
No, why bother?
I know. Well, you've got to take what's in front of us, if anything. But that's sort of the play there. So if it wants to come in here and give me something, I'm open-minded to short-term trading that, maybe towards the daily and weekly open or the range midpoint or whatever. But for the time being, on a higher time frame premise, there isn't a ton there, frankly. So that's the technical view, I think, at the very least, for Bitcoin.
Well, I see your fancy ranges, and I raise you the sickle of death. This isn't real, but is it? No, all I'm really trying to figure out is, are we just consolidating again before we go make new lows? It'll probably just inch out to the right of this, but this range down here, Don's forever range, 10K, I really do feel like in this market where nobody has any money, it seems like that's the place where people really get hungry to just do whatever they have to do for coins. And I'm not trying to be like a turbo bear or anything. I'm just pointing on the chart that where y'all have pointed to for a long time. We're at the high end of that range now. And Don, I know you've taken some stabs, but you've really talked about like 14K or sub 14K before you really get antsy. And I think that's what I'm curious of, is this is a weekly chart. So if I just ignore my dumb lines and we talk about all the weeks that we spent there before breaking down, now you have a couple of weeks here. So if you have a breakdown from this, is it a small one before you finally have people willing to step in and reverse that trend? And how does it line up with the rest of the picture? Another thing, just, I don't know, worth noting, like ETH hasn't made new lows.
Yes.
And yet it's clearly been very strong. Like on the relative pair, it's still in the same zone of nothing burger. And it just, that interests me. If it does break down, I think it'll probably, to Don's point of like it'll break down hard, right? Because people will be like, oops, there we go, $1,000 is gone, got to make new lows, and then you get whatever, 800-900. Those seem like really attractive prices to me. Like sub 1,000 ETH seems really attractive to me. Whereas with Bitcoin, I don't really know where it starts to become super attractive. One other thing I'll note is we should be at 30K right now if it wasn't for the FTX stuff. But the Dixie did fully break down from what we talked about, whether it's like now finding its happy place, like where it wants to settle in. We talked a bunch about somewhere around between 102, 104, 105. Well, it's at just under 106 now, and it's starting to wick up a little bit these last few weeks. So it's a 200-day moving average as well. So if we break down, I think it could coincide with a reversal of this local trend breakdown for the dollar. So just kind of something I'm keeping an eye on. Is there anything that y'all are interested in from a macro perspective, or do you want to keep talking about crypto? We've been talking about macro most weeks.
I mean, I took a trade on the euro versus dollar at the lows, basically. Had a lot of exchanged a lot of dollars into euro, basically, when we started fully capitulating. And I took that back. Like I exchanged it back into dollar because I think we're an interesting enough area and I made enough on this trade. I think the kind of overshoot on the breakdown, the kind of panic has reversed, and I could see it like at least a euro dollar. I could see this put into a range. So that would not be great for asset prices probably, right? Because whenever the dollar is weak, you see prices go up on most things. Right now, like the euro's been strong in the last month, but I think that's gonna change. So I think
It's right back
there's
to that level from December 2016 as well. I'm not sure how far back.
yes.
Yeah, there you go. It's also right on the. It's might be right at. It probably depends on the exchange. It's basically at the 200-day moving average, but from the other side. So there's kind of a lot of coinciding resistance.
This is what we've become, right? It's like Forex monthly position trading in light of what crypto looks like. Dom's here like, I'll give this to my great grandkids to manage on the, next monthly close. I'll see you then, guys. I mean, it's a good trade. Let's be real. It's like a good trade.
Yeah, I made
but
6%.
It's indicative of the crypto conditions that we're in, where it's just like position trading euro against USD, being like, oh, here's a level, here's this, here's that. It's a sad indictment.
Increase your buying power by 10% in a lower volatility asset, then that's not so bad.
Oh, it's a huge win. Yeah, I think it's. It wasn't a slight on Don. It was on the state of crypto right now.
Yeah,
that's where the relative opportunities are.
Mm-hmm. Yeah, it's kind of sad, but I mean, for me, I'm quite happy with this. If I can get these kind of trades every now and then, especially since you can take this on with basically all the size that you want, because I'm not afraid that the euro or the dollar are gonna go to zero. It's quite nice. Kind of, it's a little bit of a different feeling when you're actually like just trading something that you think is gonna be fine in the long run, which I don't necessarily have with crypto all the time. So it was quite nice, but now I'm gonna be back to focusing on crypto if I can, if it does give me anything. But I mean, I had a position on Bitcoin, and I had especially I had a position on Litecoin and XRP, and I closed these out during the weekend because I was expecting a red Monday, and so far we're getting it. And I expected the altcoins to be much weaker than Bitcoin, which I was also right on. So yeah, it's kind of like you see Litecoin took a big hit. XRP also took a big hit. Pretty much everything is down like from 3 to 5% today. Bitcoin is down 2. So yeah, it's a shitty market, honestly. Like when you have the strongest setups and then they go up like 10-20%, and they could go up so much more, but it's just all sandbagged. It's a little bit annoying. But yeah, just to update on that, I closed those positions. I'm gonna reopen them, I think relatively soon even. But yeah, close the positions for now anyway on Sunday.
It still seems like we're still not in the final innings of that altcoin liquidity dry up. Like a lot of these you can still trade around and do things, and as they underperform when Bitcoin goes up and they underperform when Bitcoin goes down, that starts to have an effect on the overall liquidity profile and willingness for people to trade them. Whereas in the bull market, as people recall us talking about all the time, it seemed like no matter what, if Bitcoin was going up, you didn't really want to own Bitcoin. You'd much rather own anything else because it was reflexive to the upside. Now we're seeing it in reverse, where you're getting that reflexivity, but to the downside, it just makes you not want to own it, not want to play ball in that neighborhood. And I think it's a kind of a direct correlation to the liquidity and the willingness to bet there. People are willing to escape those bags, take them back to core assets. And so you're seeing most of the price action in BTC and ETH.
Yeah, I agree with that.
I do agree.
I mean, Don closing as Litecoin long finally made my a bit later, but I had a short-term Litecoin short position on from weekly structure, and that's really kind of been the terms in which I've been engaging the market. And even then, these haven't been like big positions. Not going to sit here and pretend I'm like, oh, I'm back and I'm doing all active in the super low time frame order books or whatever. It's just because I made a bunch of like educational videos and people wanted more examples. So I thought, why not put up some like trade reviews and short-term stuff. For me, Litecoin specifically, the idea, there's a full breakdown or whatever on my Twitter, But the idea was it was retesting this big, for me, significant weekly level. And I just thought it would provide some sort of reaction. And that's kind of the core of my low time frame trading strategy. So ordinarily, if I'm swing trading, I'll buy and sell high time frame levels, and I'll target high time frame levels, which stands to reason, right? If I'm buying daily support, I generally want to sell it at daily resistance, so on and so forth. However, if I'm trading short term, what I'll do is just scale down the target side of the trade, where I'll still do business at the high time frame level for the core premise of the idea, but I'll try to exit it at a low time frame level. So the market needs to do less and give a less impressive move for me to be right. So as long as basically the high time frame level provides some sort of reaction, those kind of intraday setups tend to work out. So on this occasion, this was the weekly level, and my target was quite straightforwardly this last high pre-break, and that kind of filled out last night. But that's the type of trade. Those are the types of trades that I'm interested in these current conditions, which is, again, as I said, rather simply, you do business at the high time frame level, right? High time frame for your base, and then you use low time frame for your target. And so, for example, I could be selling, doing business at like a weekly or a daily level in terms of where to get involved. But instead of my take profit being on the same time frame, it would actually be on like, the hourly or the 4 hour, whatever it may be. And I think that's been decent. Again, I haven't been like super elated to get back in and do that kind of stuff. I don't feel particularly pressured. But, if I can find intraday opportunities, Lord knows anyone can, And I think that there's enough volatility, as you said, Ledger, for that to still make sense for people who want to keep their pulse on things and be active in the market.
So we kind of jumped straight into TA-driven stuff, but there's quite a lot going on news-wise, and I'd like to talk, not necessarily we have to dig into all the details of the news. There's a lot of podcasts for that, but how y'all think it'll affect your trading strategies. This morning, kind of a nothing burger at this point, but BlockFi declared bankruptcy. I think most people thought they'd already done so as part of the FTX bundle, but here it is, official in their own right. And not a surprise. I guess what the biggest surprise has been of the last week is Barry Silbert's entities being additionally strained. So a bunch of news coming out about where their hole is or their liabilities exist. I don't know if it's a hole specifically. I guess it is. And both Genesis Lending and DCG, the parent company, appear at significant risk and have been doing these attempts at emergency raises. The gap of liabilities has appeared to be kind of in the $600 million range, if I have read the news correctly. And apparently they've been really struggling to raise that money, or maybe their expectations are too high. I don't know. But it has not gone in a speedy manner. Do y'all think this is significant enough to have market impact, or what do you expect? How will you play it?
I mean, honestly, the whole news thing, right? Just seems to have like the only thing it does is make the market bleed, which I mean, yes, it'll probably have some impact, but I don't know. I'm just like at this point, I think the entire market is tired of bad news, and you can see it in the charts, right? It's either like it just bleeds out and no one really cares, or it just doesn't do anything. So I'm like on the news side of things, if this is not completely horrendous, I just tend to ignore it nowadays, mostly. That's kind of how
I'm still
I go about
excited.
it.
I still follow it. I still think there's maybe market impact to squeeze out of it. We're certainly in the final innings as far as, how many market crushing pieces of news, as in like, the 25, 30% moves do we have left in us for this cycle? I think very few is the answer. I am disconcerted by the whole DCG Genesis situation. The fact that hasn't been resolved, and it's been like, a couple of weeks basically since that was floated initially, that to me is cause for concern. I really thought that would be one of those, either you quickly like plug the hole and raise money, given how core kind of crypto infrastructure, how core this is to crypto infrastructure, or you kind of have to assume that, as we are now, that they're having difficulties, and the only reason for a lack of an expedient kind of resolution is because no one's willing to take them up on it. So I think DCG and Genesis, they're just way too big, even at these market caps and at these prices, not to have a market impact. if a worst case scenario materializes. So I think that's maybe even like the last one worth paying attention to, because I think if it goes really badly, I mean, these are huge, as I said, central pieces of infrastructure for crypto. I can't see. I mean, it's unlikely that they don't have a market impact. And I also think, if we use the dreaded C word, contagion, if that becomes relevant again, the vehicle for that would certainly be a DCG Genesis type of unwinding or worst case scenario. So for me, that's still important, but it's quite plausibly the last big kind of news driven thing. I don't know if you guys agree.
Yeah, I think we're seeing the impact of news start to dwindle, which is always good. Signs of bearish exhaustion from a news flow perspective. Doesn't mean that it, immediately turns into moon everything type of scenario, but it's a positive result. So you start to see bottom things occurring, right? Where somebody else is extremely important to the ecosystem is bankrupt. Guess the price won't move at all. Just the boredom side of it, and that's what you want to see. It could take weeks or months though for that to truly play out, but it can give you more affirmation that the bottom is either in or close to in, and therefore gives those buyers in the lows, in the teens, sub 20K buyers more confidence to double down if it goes down rather than to capitulate if it goes down, versus the kind of hopium buys of 30K or whatever, because it's not going to go back to the prior all-time highs. It's never done that, or whatever kind of justification. So the article from the block is like a week old, but as far as I know, this is still going on. And I think there's probably other news-driven stuff to be on the lookout for still this week.
Yeah, I've got it here. We have the Attorney General of the Bahamas addressing the nation on the FTX thing. I mean, it's a massive PR crisis for them, obviously, among other reasons. SBF, I mean, I can't believe I'm reading this, but SBF speaking at New York Times Dealbook Summit on Wednesday, I think digitally, or at least I hope so. That's my understanding. And then Powell speaks at Brookings Institution at 5:30. Thursday, Senate committee hearing on FTX. I'm sure that'll be very balanced and reasonable and wonderful. I mean, that's going to be a complete mess. I'll probably listen to that one 100%. And then on the Friday, macro rears its head again, at least somewhat, with NFP with 200K estimate. So that's kind of what's on our plate for this big week. And obviously the whole Genesis thing, maybe we see some headlines, maybe we don't. As long as that, the longer that,
this week.
That's this week.
Oh, okay.
Yeah, that's this coming week. So yeah.
This Thanksgiving thing confused me.
Oh right, yeah.
I didn't really read too much about the Bahamian AG thing, but I saw that Sam was retweeting it, and then the fact that he's doing the Dealbook Summit. I mean, sure, why not? I mean, he's like he continues to implicate himself further pretty much in everything he says. So
I mean, he must live in a different version of reality, right? That's seemingly the only explanation. Like, he's not the CEO of FTX anymore, but he still seems to think he can like raise money and have like a positive impact. And he's doing all these speaking gigs and retweeting stuff that is and isn't in his favor. That there's something, how he corresponds with the world we live in seems quite different to how the ordinary person does. I don't know if it's quite clicked yet. Like, even if you consider the way in which he described what happened, there's no real mention of like customer funds or addressing the premise of should have customer funds really been used for this in the first place. The sort of elephant in the room. The entire thing was, oh, well, this was our leverage, this was the bank account, and like this is FTT. I mean, it's insane. And I think as much as people might want to apply like, oh, it's like a 4D chess lawyer defensive strategy logic to it, I really don't think it's the case. I think it's a poor engagement with reality, frankly.
I have seen some people do giving those 4D chess arguments where if it's incompetence, it makes it harder to pin him down for pure outright fraud versus like, so when he's caught saying like leverage got away from us, not we stole customer funds intently. by intent. Like he just the way he talks about it can give legal wiggle room,
Right.
and I don't I don't want to discount the capacity for him to find that legal wiggle room because um, he does have his parents probably still love him and like are trying to give him advice, and they are quite familiar with how to work the system in that way. So um, I think what would be really upsetting is if he doesn't really get held
Accountable.
accountable. Thank you. I got like foggy brain, man. If he doesn't get held accountable for his actions in the way that most people believe he should, which is a lot of years in jail, um, especially in this environment where you see other very sad things happening, like the Tornado Cash developer is in jail without charges for like months, you know, and there's no like what's happening there, and it's just this difference between these two scenarios, or people who are being charged with things by the SEC for really weird reasons and relatively small amounts. Like how much the press releases on Kim Kardashian type stuff, and then like the total like is something going on here with SBF, who I have a relationship with his family. Like, I didn't see that. It's like, come on, man. Like it's just also gross. I'm just
It
gross.
undermines the rule of law, right? That's
It
the
does.
core issue, that the laws are being applied selectively based on someone's status or wealth or pre-existing conditions or whatever else. And I think that's also reduced people's faith in the US legislature being able to kind of investigate this in an independent and fair-minded manner, given how deep the SBF empire tentacles were in, Congress, Senate, and so on and so forth. So yeah, it's very messy. I mean, the only argument perhaps that you could make is that because it's so embarrassing for so many of them, they'll overcorrect in the harshness of kind of sanctions or punishment or whatever. That's maybe a kind of positive scenario that may emerge. But yeah, it's all messy and very incestuous, which is a byproduct of the large lobbying efforts that preceded all of this.
Yeah, and perhaps we'll hear more in those hearings that you were talking about on the schedule this week. So we'll see some potential accountability and um, find out like what is their plan now. But so far it's been pretty frustrating. Um, I don't really have any other fundamental news. I guess there's a couple of things to be on the lookout. Like we want to continue to see what's the dollar going to do? What are rates looking like? Have y'all been paying attention to any of that stuff? Are you using any of these tools in addition to what's going on in crypto in order to analyze the market?
So the final point I'll quickly make on the whole macro regulatory non-trading stuff is Alex Kruger or Kruger Macro shared this nice note from JP Morgan about the crypto ecosystem post FTX and some of the things you might reasonably expect as a result. I thought this was quite interesting. It talks about existing regulatory initiatives already underway are likely to be brought forward. It also makes the argument that new regulatory initiatives are likely to emerge focusing on custody. New regulatory initiatives are likely to emerge focusing on the unbundling of broker trading, lending, clearing, custody activities. And if this goes through in some sort of very aggressive fashion, the understanding we have and how we interface with at least regulated exchanges or exchanges more broadly will likely shift quite a lot. New regulatory initiatives are likely to emerge focusing on transparency. We've seen the industry kind of move towards that endogenously via attempts at proof of reserves, even though as imperfect as they may be, it's a move in the right direction. Again, the point about crypto derivative markets, which are very important for crypto and kind of the basis for price discovery. And if you measure by volume, the amount of, this is pretty much the most important trading piece of infrastructure that we have in the market. We'll likely see a shift into regulated venues with CME emerging as a winner, and we sort of see the offshore squeeze to some extent. And and they make the argument they're skeptical, although for a structural shift away from centralized exchanges, and they kind of go back and forth on some arguments there. So this is an interesting note. As far as the macro stuff goes, I mean, when Don and I discussed it, I think the case we ended up making was that The dollar index is like in an area of support. It's not like a perfect one by any means, and it's not like I think there's like a 3-month or like a quarterly or maybe monthly level. For me, if there's going to be any type of trend continuation or any absence of just a large breakdown, it more or less has to come from the low hundreds in one form or another. Like where the market is right now, as I mentioned, it retraced to the base of the last leg. And that's kind of where a lot of the selling has slowed down. So I think Don made this argument earlier. If this starts to push, especially dollar at support, euro at resistance, if that starts to unwind or unfold, I should say, then that's probably an extra type of headwind to us. As far as the S&P goes, I actually think there's a very clear line in the sand around the 3,900 handle. Support, resistance. The market's currently above it. Like even if you look on the daily time frame, if you're doing a TA textbook on what a good level looks like, this has to be up there somewhere, right? So that's a decent line in the sand for directional bias. As long as we're above there, maybe we can just trade within this larger consolidation and do business, which is fine. I think. As you argued, Ledger, like if it weren't for crypto specific weakness, then we'd likely be at our range highs or even higher right now. We don't have that as a benefit, but the very least we could ask for is that we don't get macro and kind of risk asset repricing as a headwind. And I think anything below 3,900, if this starts to look pukey, then that will certainly act against us. The final point I'll make is the benefit of at least how I'm engaging the market on a much lower time frame. If I am kind of day trading type of strategy, it allows me to filter most of that noise. So, as long as the level kind of sort of maybe does its job and provides a reaction, that's all I'm asking for. That's all the trade is. There's no kind of trend prerequisite or larger reversion. It's just, candlestick make boing. And I can afford to put my blinders on as far as the bigger picture stuff goes. But I think structurally speaking, in terms of thinking of weeks, months, etc., dollar rates, risk assets, I think all of that still matters whether we like it or not. Although it starts to matter less the lower we go because the market caps get so trivial.
I will say rates are showing that there's an expectation that we at least slow down with increases. Both 10-year, 30-year are presenting fairly weak. And if you look on like the monthly and even 3-month time frame, I feel like it's pretty revealing. You're on the 3-month right now there, and there's still time left in this, but that month is about to close, and like the dollar. Looks like it's ready to just at least sideways itself for a while. I also, like I've said a whole bunch on this show, I think that's kind of important in terms of figuring out, hey, what's the impact of what we've already done? I was talking to somebody recently where they were talking about the what rates are doing versus what the actual baseline rates are. So if you're 10-year, 30-year, if they're around 4%, but then your actual mortgages or your healthy lending rates are more like 7 or even 8%. There's a lot of wiggle room in that spread, right? And in times where there's more certainty, sometimes you can get these baseline rates, LIBOR or whatever, +1, or like prime rate +1 is where things settle down. But it's like the spreads are widening when there's so much uncertainty in the rates because they have to build in more wiggle room, not knowing what's going to happen next month or next quarter. And so if there's signal of rate of change slowing down or the pace slowing down for what rates are going to be, then you might see that gap narrow and you actually get a positive result, meaning rates go down on like 10 and 30-year yield type stuff, and people start to engage at lower rates. So I'm kind of looking out for that to see if, I don't know what the technical terms are for these. I'm too stupid for that, but just trying to see if some of these start easing off, even in the face of a 50-point hike or a 25-point hike, whatever. If we start to see the gaps narrow as people expect lower volatility from the Federal Reserve.
Yeah. I mean, these things, they need to, as you say, sort of flow through the economy. It's very difficult to do any sort of meaningful economic planning if the rate of change for these core pieces are so high. And that's kind of been
you can't do it.
you
It's
can't
like,
do it. Yeah, like stuff breaks and you can't plan for like that's the whole thing, right? The reason you want predictable, why investors like certainty and businesses like certainty, etc., or at least some lower volatility, predictability, whatever adjective you want to use, or noun in this case, whatever, is because it allows you to plan for the future. And you know, if you're getting the fastest, if the rate of change is too high, then you can't plan anything. And you know, we've seen
Yeah.
that in housing markets and financial markets and so on and so forth. So
I
yeah,
know
I think
a lot of
Go on.
people who just put things on hold, right? It's
Yeah,
just like,
yeah.
I'm just gonna wait. You know, I gotta understand what the heck is going on, and that's kind of a self-fulfilling component as well. Maybe that enables a soft landing, right? Like demand goes down because people just put everything on hiatus, and then it takes a long time for people's comfort levels to readjust, and it's not simultaneous. Like, whereas when we injected money into the economy, it was a simultaneous, across the board impact on demand. This will be a slower rebuild of demand as people get more comfortable at different times. Maybe that's part of the plan. Maybe that's how they're going to soft land this thing. I'd be very impressed if we soft landed.
Oh, for sure. Yeah.
I don't see that as likely, but yeah, I feel like we're already mid crash. You know, we just don't know it yet.
But I would love it. It'd be kind of cool, right? If this whole thing ended without, we had enough crashes, right? The COVID crash, we've had like the crypto crash. We've had enough. I just want to have like something work out, because it's been feeling like the last 2 years nothing's really worked out. Everything just either went too crazy to the up or to the downside. So fingers crossed. But like you, I'm not necessarily. My hopes aren't too up, at least. So I'm not going to be too disappointed if it all goes to shit, because at the end of the day, that kind of feels like the status quo, right? Like everything goes to shit. That's the normal. And if it for some reason doesn't go to shit, you're like, oh shit, let's go. Which is a little bit frustrating.
The thing is, I've made this argument before, so I won't make it too long. But like, I think like hoping for a recession is a very dark and bleak thing, because recessions kill people, and there's no other sort of outright way of saying it. The impact on real lives during those types of economic periods, you know, suicide rates and the correlation between unemployment and just death, all of those things just aren't good for humanity. So, you know, while it's easy to take the sort of greed perspective, like, oh, fill my cheap bids and all this type of stuff, there's a real human cost to getting the economy wrong to this magnitude. And so obviously if we can avoid it, that's a wonderful thing. I mean, asset prices slightly less important if we're taking the humanist case, which this isn't a philosophy podcast, but it's nice to think about sometimes.
Share a little quarterly hopium for you.
Oh, please.
This goes back. This is S&P going back to the 20s, and historically has had really reliable bounces off of the 20 quarter moving average. I know that's going to really get you
nice.
Get you going there, Cred. Minus periods where we've had really severe recessions. So it may, if this is a bottom, then it's just business as usual pullbacks, bear market, typical bear market, not full-blown recessionary. And we should hold the 3,500 range on SPX if we want that to maintain truthiness. I can actually see a world where the bottom on this is pretty much in, and you just continue to have this cyclical rotation amongst the categories of the market. But anyway, I just thought this was fun to share because it was a pretty nice bounce off the long-term trend. And that was 3/4 of down moves. You know, that's a lot of down for the stock market if it's not a full-on like deep recession. I mean, 2001 was really bad. 2008 was catastrophic. So, you know, we were halfway catastrophic.
It kind of looks good. It's fun
yeah,
to
it looks
chart,
fine, doesn't it?
It honestly looks pretty good. But on any time frame, honestly, like I'm looking at the S&P on the monthly, and I'm like, I mean, it's not too bad. We broke monthly support, but hit support below it, bounced strongly off of it, closed back above the support, and we retested it here, and bounce strongly off of it, right? Like that's not the worst chart in the world. Excuse the extra lines here. But I mean, it's just a chart that looks like it wants to go sideways or up really at this point, to me anyway. Like this looks like this. And then like eventually it wants to walk up, I think. But
and that's what happened in the 70s as well, in a period of high inflation. And it makes sense, right? Like at some point, you actually don't really want to hold fiat currency because it's still inflating like crazy. But you may want to hold kind of the top revenue producing assets that you can. And that includes the 500 most profitable companies in the world. So why not?
Yeah, I think that's right. Also, just very quickly, I'm getting memed for my death thing. I would say that even if you view it from a purely market-oriented lens, a soft landing means that risk comes back to the market faster than it would in a recessionary, hard landing, crash type environment. So even if you ignore my argument about recessions being bad things, which is crazy that I have to sort of explain that premise, if you view it purely on line, make, Boeing valuation from that lens, you want a soft landing because it means that we kind of get back to a risk-on environment quicker. So I don't think there are any prizes for hoping for the worst, because even if you do get cheaper, quote unquote, cheaper entries, it'll take much longer for those entries to do anything and for a new trend to emerge and for all the positive stuff and those conditions risk-on conditions that we like. There's a cost associated with, you either get it not as cheap, but the bull market comes back quicker, or everything collapses and you get it cheaper, but it takes much longer to come back. And there's sort of trade-offs on both sides. It's not entirely clear to me why, it's not a one-sided case that I want everything to crash and die because it'll be cheap. There are downsides to that. I think specifically time-based components, if you want to ignore the human factor.
Yeah,
very strange. I need to explain that.
Yeah, the thing is, like, if it all crashes and burns, right? There's a good chance that you lose your money, even if you are not in the market, right? We've seen what happens when prices go down. Like FTX just disappeared. It's a large chunk of the crypto ecosystem, right?
Yeah, doesn't matter if they're in stables or not, or USD.
Yeah, you get fucked no matter what. And it's the same thing. Like we've had the same thing in Europe before, where if a country is failing, right, the citizens with money in their bank still get fucked, right? And no matter if you have like your gold or whatever, like how secure you are, if you're hoping for a recession to buy cheap, there's a good chance that you're actually not going to be able to, right? I find it's stupid kind of thing to hope for. Like if you're hoping for, or at least hoping for a crash, right? Recession is something else, but like hoping for mass crash, not necessarily the best for anyone's interest. You want to be hoping for at least some stability, because the more unstable the entire world gets, the worse place it is. It's just how it is. So yeah, I don't see why people are memeing, but it seems pretty stupid to me.
Yeah, I guess if we do go hard landing, our goals should be preserve our buying power as much as possible, because the opportunities will be significant on the other side for the few who can sustain it.
Yes. If you're actually going to be able to, without your exchange going down or your country, whatever, like a bunch of shit can happen.
Good luck for all of us on that. Well, I hope you guys have a great week. That's kind of a bummer type of thing to talk about on the ending, but that's where we are. Bitcoin's $16,000, and we're wondering if it's gonna go cheaper. So sad days. We go back to like 50K, 60K Bitcoin, and we thought that wasn't high. Remember that? 60K was too low. Take it to six figures. Thanks for joining us, Cred, Don. Good to see you, audience. We appreciate you. Hit like on these videos, that kind of stuff. You can also check these out on audio, all your podcast apps, etc. weeklyopen.com. Good to see you. Bye-bye.